Welcome to TradeTheMBI.com. This is Jonas Reports for July the 1st. The market made an attempt towards the highs, but then reality set in as the numbers for consumer prices, everything continued to show one thing, and it's the same thing we've been talking about for a year, as everyone was preaching that the Fed was going to cut 8, 10, 12, 50 times to get back to zero rates. And I told you it was all BS at the time, and it continues to be BS. You compound that further with what happened at the debate. I think the recognition was that the dynamic has changed quite a bit, and no longer is there any expectation that the Fed is going to be able to do any of these things, because there never was a possibility for the Fed to do them given what inflation is doing. And all you had to do is look at the rise in oil over the last month, and you knew exactly. Fine, it eased off a little bit, but now it's just going to reaccelerate. So by the time you get close to the election, you're going to have another resurgence of inflation numbers. So it was all nonsense to begin with, and we knew that. But that doesn't mean that the market doesn't react opposite to what it is, because again, their job is to trade against the crowd, and that was a defying of the reality, but that's okay. Sooner or later it rectifies, and I think you're going to see in July probably just the opposite of what we saw in June. First you're going to see the ABM yellow right here. That becomes the question mark. 55.10. Break below that, given what we're seeing from the MBI readings, is a negative, as well as the short increase here. You can look for a decline at that point, because below that ABM, I think that supports are unlikely to hold going through. And I think that would be a recognition of the dynamic change that there's going to be policy change come November. Things are likely to shift, and how that shift is going to look, I think, has added uncertainty to the situation. Now, can they replace Biden in that? No, unless they invoke the 25th Amendment or he resigns. You can't change who's on the ballot in most of the states going into November. So a lot of that talk is just nonsense at this particular stage, even though the convention hasn't happened. So you're left with those realities. From an NQ standpoint, a much more significant range to drop. Positive extreme wise, not so bad. Again, it's pretty equivalent to what we see from the S&P. Is just a little bit more extreme of a dip, just because it's had a much stronger move, and that's just been the flight to what everyone thought was safety, the AI trade, whatever you want to do. But this is, again, right here, shows you the ridiculousness. We laughed as, bond traders kept reducing overall rate, expecting that there was going, and then just keep getting hammered underwater. And, a lot of these purchasers have to be banks, because it's, and the Fed mostly, because it's not foreign buyers. We know that. We can see the numbers. China's been fading out, even Japan, so they're just, who's buying that debt? Mostly the U.S. Treasury, or in this case, the Fed is buying it. But you saw a huge recognition that rates aren't going to decline. And when you get that kind of move in a bond market, that's not a healthy thing, because it shouldn't be moving like that. And that just shows you how ridiculous some of this trade has been, and it's costly, because it's an indication that there are a lot of banks that are still struggling and are underwater on a lot of their positions, and that they've been given grace not to have to market to the market. That's going to change at some point. They might be able to hold it off for a little while, but if things from an economic standpoint continue to soften, and we can see the consumer struggling, and a lot of stocks that are related to consumer purchasing have been fading and doing so quickly, it's been masked by the outperformance on some of the tech stuff. But again, there's that tipping point, that straw that breaks the camel's back, that eventually recognizes where things are going to turn into. And here, from oil standpoint, we're all the way back up, well over the 80 range here, and going to be approaching those highs fairly soon. And that, again, is a problem. Now, from a euro standpoint, the fact that it's even at this level is just a gift. It shouldn't even be there. And again, this is that relativism. Everyone talks about, the dollar's going to lose its, status. No, everything's still traded in dollars, so it's going to maintain it. It's just a depreciation for everyone across the board. your purchasing power just gets diminished. And it's just that slow stealing effect of inflation, which is exactly what a Federal Reserve System is designed to do. From a gold standpoint, you would expect an explosion in gold coming forward. There's no question. The same is likely to take place within crypto once that begins, and any inference that there's going to be extended weakness within the market hasn't triggered yet. So it's one of those where it's just a matter of waiting. But you can see ETH much stronger readings than Bitcoin at this particular stage, and a lot of that Bitcoin is that Mt. Gox that could take 4 months for that to resolve, as far as where they think all this extra liquidity. But uh, you can see with crypto, you can get a massive move in just one day. It's a little different due to the lightness of it. From a 50K standpoint, yeah, the sell signal came in, was pretty clean from there, and just went all the way down. We got all the way down right back towards that positive extreme filling number, was just slightly below it, but that just matched the lows that we had from before, and there was a slight recovery from it, but probably unlikely to get much past that 50% range on any move, because what's your upside from the positivity standpoint? Not a whole lot. And you saw that from the beginning of the day. Uh, Market opened after the fake pump up, and it just sold off continuously throughout the day. And of course, some of that's options related status, and that's where you're probably going to see your greatest buy volatility will be in option trades going forward into the shortened week with the 4th of July and that. So yeah, buckle up, people. July is going to be an interesting one, and I think that there's a lot that is going to play out as it really becomes harder to disguise what has become what we already knew was a pretty obvious situation with where things were economically. So that's the long and the short of it for now. As always, new indicators will be out, so be ready for July's trade. Have a good one. Trade well.